Hello and welcome to this Forex Preview at XM.com. We'll be discussing the upcoming U.S. employment report for March and the potential reaction in the dollar. I'm Maria Pachurdes, and joining me is Senior Investment Analyst Harlambos Pissouros. So Harlambos, at the last FOMC meeting, Fed Chair Powell pushed back against rate cut expectations, but investors stuck to their guns and continued pricing in rate cuts. How might the upcoming non-farm payrolls data out on Friday affect these expectations?
Hello, Maria. Yes, investors maintained their rate cut bets, and what may have added credence to their view was the slowdown in the core PCE index for March that came out on Friday. Let's not forget that that core PCE index is considered to be the Fed's favorite inflation metric. Now, after the release of that data, the market was evenly split on whether the Fed should hike by another 25 basis points in May or not, while expecting a series of rate cuts to begin in summer months. Yes, headlines over the weekend that OPEC oil producers agreed to output cuts tipped the scale towards one last hike, with the probability of such action rising to around 65%. However, more than 50 basis points worth of rate cuts by the end of the year remained firmly on the table. Now, on Friday, non-farm payrolls are expected to have slowed to 238K in March from 311K, but combined with an unemployment rate of 3.6%, that number seems consistent with a still tight labor market. On top of that, the S&P Global Composite PMI survey said that the rate of total job creations was the fastest in 6 months during the month of March, and thus the risks surrounding the NFP print may be tilted to the upside. Now, with regards to average hourly earnings, they are expected to have slowed to 4.3% year-on-year from 4.6%, but the S&P survey pointed to greater wage bills during the month of March, so there may be upside risks here as well. This means that improving wages could also translate into improving consumer confidence and demand in the following months, which could refuel inflation. Therefore, a report pointing to further tightening of the labor market could increase the probability for another 25 basis points hike at the upcoming Fed meeting, with market participants perhaps scaling back some of the rate cut basis points they are pricing in.
If we get a strong NFP print on Friday, what reaction can we expect in euro-dollar? And is there anything else we should watch out for before the May FOMC meeting?
Now, a strong report could prove supportive for the US dollar, but calling for a bullish reversal would still seem unwise. Because ahead of the May FOMC meeting, market participants will still have to digest the CPI numbers for March, as well as the first GDP estimate for the first quarter. Now, downside surprises in these releases or new headlines spreading fresh fears about the stability of the banking sector could very well prompt market participants to start pricing in a May pause again and more rate cuts towards the end of the year. For now, any dollar strength resulting from Friday's employment data could be seen as a corrective recovery. Now, with regards to euro-dollar, the pair could slide back below 108, but with the ECB still expected to continue hiking more aggressively than the Fed, the bulls could recharge from near the crossroads of the 107.10 barrier and the uptrend line drawn from the low of September 28. They could aim for another test at the peak of February the 2nd at 110.35, or even the 111.75 zone, which offered strong support between November 2021 and February 2022, and also acted as a strong resistance on March 31st, 2022.
Harlambos, thanks so much. And thanks for joining us for this Forex Preview here at XM.com.